Hello everybody, and welcome to my first video of 2025. We had a little bit of excitement in the financial markets last week, as you may have noticed. That was the biggest one-week drop since COVID came to our shores. The cause of the drop, as you probably know, was President Trump announcing not only a new policy of tariffs, but a tariff policy that was much harsher than anticipated. And the market didn't like it. I don't like it either. Very few people with an understanding of economics think that this is a good idea. Tariffs are not typical Republican or Democrat doctrine. This is a Trump policy. So what should we do? Sell everything and bury our cash in a coffee can in the backyard? Load up on crypto? No. I'll tell you exactly what we should do. Write it out. Here are several reasons why. Number one, the market is already down in reaction to the tariffs. It certainly could go down further, but we would not be getting out anywhere near the high point. And in fact, according to the investment company Creative Planning, in the last 75 years, the S&P 500 has been down over 10% over the course of 2 days, like it was last week, 6 times. In the year that followed those pullbacks, the least the S&P 500 returned in the next 12 months was 21%. The most was 62%. Will a pattern like that repeat this time? I don't know, but it's certainly more than possible. We have seen a movie like this before. This is number 2. In 2018, during Trump's first term, he put on tariffs and the S&P 500 went down about 20%. The S&P 500 then went up an above average amount the next 3 years in a row. That is certainly not a guarantee that things will play out the same way this time, but it is unquestionably possible. Number 3, this is not just something that happened to us like COVID. This is a policy decision. And just as easily as a policy can be implemented, it can be eliminated. We have already seen Trump alter tariff policy multiple times in just the last 2 months. Number 4, this is not the only Trump policy that we are going to see that will affect our investments. He has also said that he wants to lower corporate income taxes, which I think is likely to happen. If it does, it's a near certainty that that would benefit our stock funds. Now, would that be good for our country? Oh, that's a whole nother debate. But you could expect a very positive reaction from the stock market if corporate taxes decrease. Number 5, what else could go right? Well, if economic growth slows due to the tariffs, it's likely that the Federal Reserve will lower interest rates, which also tends to be favorable for the market. I could go on and on about how things could play out, but only time will tell. I do think it's important to view the tariff issue as a temporary problem. I can't guarantee it, but I think the worst case scenario is that tariffs are gone at the end of Trump's term in office. More likely, they're gone or reduced by the midterm elections in a year and a half. And even more likely, they're reduced way before that. Bottom line, tariffs are not a permanent yoke around the neck of the U.S. economy. They are a temporary problem that can disappear with the stroke of a pen. So, I've worked with many of you for decades. We have been through countless market dips before, and my advice is always the same. Keep calm, stay patient, stay the course. Let's not get cute and try to time the market. Write out the bad news headlines of the day and things will come back over time. That has always worked for us. I predict that the same strategy will work again this time. There's nothing exceptional about this market drop or its cause. So please, relax, take a breath, and let's enjoy spring.